We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about the HUI Index, Gold and Silver Stock Index. I think it's the Philadelphia HUI Index. And we're looking for cycles, and we're looking for well-defined market structure to see if the bulls are really in charge. So what we've done here, I've taken, I've run the for a cycle scan in the cycle finder spectrum, and I've run it between a range of 100 and 750 cycles. Ideally, you know, if you want to hold a long-term position, you want a decent cycle. You want, like 2, 3, 4, 500 period cycle, because obviously you want to hold it for a period of time where it goes up 30, 40, 50, 100%. The sample multiplier was 5 times the larger number, which tells you how much data you can pull in. So I've got 5,500 records of the HUI, and I'm using 3,750 records to find for a cycle. And what you see down below here is you see the amplitude of the cycle, because obviously if a sine wave is going to swing up and down nicely, the amplitude is the size of the swing. So you want good amplitude. And the solid red line is how well the market data fits into the cycle. So the lower the number, which is the Baltau score, the better this cycle fits into the underlying data. So quite surprisingly, what I've known for some time is that the HUI is very, very sensitive to cycles. You can see 3 whoppers here around the 300, 289, 427 and 535. So this is pretty unusual. You don't normally get 3 large fat cycles like that, but this is daily data. Sometimes you get better cycles with the calendar data. I haven't tested it on that, but we could, I suppose. Let's have a look. There's 100, 750, 55, yes, run scan. What this does is just runs through all the cycles between 100 and 750, so there's there's 650 cycles there, and it finds the best Bartel score. So the calendar's at the moment the daily data, which is the trading data, which is Monday to Friday, is better than the calendar data, which is Monday to Sunday. But there's a bit of action there. Okay, we've got weekly and monthly, but anyway, going back to it, we've got some cycles to work with, so they're going to be we want to put those onto the chart. So we'll go back to the chart. I load 3 cycles in. Okay. So what we can see here, I've loaded in the 535. Now when we load in a cycle, we get a nice swinging amplitude sine wave action, a bit of breakdown here, obviously because the market undertook a divergence from cyclical behaviour. And we want to see how well the lows fit in, and the highs fit in. We want to see how well it fits. I got 3 cycles, and I believe I found that the 300 and the 535, I rounded the 300 up from the 287, and I've got the one down here, the 427. As you can see, the cycle didn't really work around here that well. Started to work here, it sort of is working. But when I score the cycle waves, it's how well the data fits, and I'm finding this cycle here is the best. And it tells me we've had a very the other thing is we've got to measure how well the cycle swings. For example, when we have an upswing, how well does price do? And the underline down below here, you see this red and blue line here? This is the detrending price oscillator fitted into the cycle. So, for example, here's a good performance. Sine wave goes up, price goes up. Sine wave goes down, price goes up. So here we can see categorically that price is fitting well within the sine wave action. Here sine wave goes down, but price doesn't go down. This is what we call an inversion, because it's not acting the same way, it's the opposite. So here we have some strength, and here we have some confusion because the sine wave goes up and it goes down. So we can say, if you've got a sine wave saying the price actually goes up, but price actually goes down, that is incredibly bearish, because something's broken, something's breaking down here. You've been cycling for some time, and all of a sudden something breaks. And look at this good action here. Up, down, perfect. Now the reason why we do get cycles in the market, you're probably thinking, no, I don't believe this rubbish. The reason why you do get cycles in the market, because nothing moves in a straight line. Buy, rest, buy, rest, buy, rest. So you see that zigzag action? That's just cyclical action. So all we're trying to find is, yes, this has got a certain behaviour behind it, give or take the fundamentals, but the people buying and selling the float or the stocks, they have buying bursts and they have selling bursts. Okay, so it has a characteristic, a behaviour pattern. Okay, so what we can say here based on the cycle, we've had some good action here. See how the price went up, goes down and bottoms. Now all those people trying to, remember every analyst picking, oh, that's the low. This is the low. This is the low. No, that's the low. Well, if you knew your cycle, you would have expected it around this time frame. I bet you they did. And then and then you have your massive blow up. Now cycles, you don't always predict how far the price is going to move the cycle, but you know it's up. But the importance of this one here is the fact that the price followed the cycle wave up so well. And we have very poor strength on the down. So we had a downswing here, but it really hasn't gone down. It's just gone down and sort of held. And we all know that's what are we calling it? Some sort of 50%. Yeah, bouncing around. Look how strong that is. That is strength. There's no volume in this chart, but so the good companies, the good balancing companies in the HUI, I would think it would be very attractive right now. So now we're coming into a period. I believe this period is. What was that? That is second half of 2018. We have strong cycle upward pressure. Now it may go before, may go after. So I wouldn't be surprised if finally the bears relent and the bulls take over, and somehow we get breaking action or breaking out in the HUI, which is obviously you'd expect gold and silver or one or the other starting to move higher in the middle of the year. So just watch out for that. And we look down at our faster cycle. So this is the 150, this is the 535, and this is the 300. Oh, sorry, yeah, the 300. So as you can see here, it's pretty good cyclical behaviour. And this is also bullish. We had a swing up here, right? Swing up. This is the Christmas time. Didn't sort of putted out, but it was a swing up. But now we're coming into the time frame now. We should get a swing up. So this is when you get two cycles. I mean, this is so good. I think we'd be pretty confident. Better than tossing a coin confident, because that's all the market is. You've got to be right more than 50% of the time. That the buying pressure is coming to the HUI. Now, just a quick look at the moving averages here. If you watched my video series, Power of Simple Moving Averages, part 1 to 4. I cover the importance of simple moving averages. Here we have the 150 week with 50% bands, and as you can see, it fits quite well on the pivot points. Now, if you want to watch the part 4 one twice. Now, what we have here is we have, for example, look at this. Just before we get carried away, here's the box. Come on. We have sort of a wedgie type pattern. Then we have a punch up and a sort of hold at 50%. Punch up and hold. Punch up and hold. So it gets kind of spooky in it, but they call that a fractal. So at the moment, that is looking pretty damn good. Now, why does that sort of matter? Well, as you can see, this moving average, 150 week moving average, has been the bellwether of support and resistance. Okay, so what we have up here, we have charging up. This is strength. Goes above the upper band. Come here. This is good strength, very good strength, very good strength, very good strength. Even though it's overbought, but it's still good strength. It's punching up beyond the range. Here we have weakness because it can't do what it's done before. So it can't reach up what it's done before. Now imagine you're in a 50 meter in a pool of 30 meters, deep. And you're jumping up from the top to the bottom. You're doing that every day. You do that 5 times in a row. Sorry. The first one you make it, the second one you make it, the third one you make it, the fourth one, fifth one, you just can't quite make it, and that's what's happening here. You're running out of energy, you're running out of strength, and this is weakness. And obviously, of course, that confirms the weakness there. And your Wyckoff logic and your Wyckoff understanding comes into analysing these patterns here. This was, come here, where are we? Strength. Unfortunately, this wasn't any strength here. We got a V reversal here, we got nothing here. This was, as you can see from the cycle, expecting a bottom, and it didn't work out, so that was very much weakness. So here you have, look at the cycle bottom, maybe I'd take a position here, but it didn't really break out. The Wyckoff logic shows no sign of strength, or only minor sign of strength. Didn't break out, so that was, you had a sign of weakness down here to continue on. So that was a failed accumulation. It was probably most likely a redistribution because there was no sign of strength and you had a sign of weakness that carried us down here. There's probably sign of weakness down there. Anyway, so the cycle pattern here, along with the support and resistance around the moving averages and the bands, is looking pretty good. So the other interesting thing here is that the HUI Index is not packed with the stocks with a lot of stock float. It's hard for the big boys to accumulate because there's just not a lot of stuff around. So you've had 18 months between here and here where they've woken up by this big rally. They most likely wouldn't have been too brave to accumulate here because a lot of the stocks were under $10. So now that it's moved, they've woken up. They've been trying to accumulate here because they see something coming. They've respected the strength, this massive percentage move. So they've been umming and ahhing, trying to get in and trying to shake out people who don't want to hold. And eventually this is going to move. So if any stock manager out there that says, look, we're not bullish on gold, they're telling porkies because the stocks are bullish. So the cycles are good. So when you're analysing indexes, sectors, and you can find a relationship between support and resistance and the moving averages, the large moving averages, and with cycles, it helps you with your fundamental analysis to work out whether now is the time. Thanks for watching.